Please remember that futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I author in my weekly written reports. Prices shown on charts and quote bars are in real time and take into account all known activity up to this point in time. If you'd like to read more of this disclaimer, simply hit the pause key on your computer screen. Welcome, traders. I'm Boyd Baker, and thanks for tuning in to the third of a series of options tutorials. In the past, we covered some of the basics of options trading, definitions such as what is a put, what is a call, what is the premium, and the strike prices that you might look at. Today, we wanted to cover delta, and delta is one of the most important concepts that I want you to walk away with when you're looking at these tutorials. It's very important when you're looking at what option you might want to buy or sell, and it's important to know how fast that option is going to move. Defined, delta is the percentage change that an option makes according to the change in the underlying futures contract. Now, simply, if you're looking at a formula, it's the change in the option price divided by the change in the futures price. Now, one way we can look at this is going back to those strike price relationships, which we covered in the other video. And we talked about out-of-the-money options, at-the-money options, and in-the-money options. Now, the delta values are going to be different for each one of these relationships. This is a gold chart, and roughly gold is trading here again at about $1,250 an ounce. We talked about an at-the-money option being a $1,250 call, an out-of-the-money option being a $1,300 call, and an in-the-money option being a $1,200 call. Now, the concept that you need to know is that each one of these delta values is going to be different depending on this relationship. As a general rule, at-the-money options are going to move about half as fast as the futures. So the delta of an at-the-money call is going to be about 50%. As we get further out of the money, those delta values become less. An out-of-the-money option might only have a 20 or 30% delta. If you're buying deep in the money calls, you're buying a 1200 call or 1150 call, they're going to have delta values which are much higher. They're going to move closer to a one-to-one relationship, like the futures is moving. They might move at an 80 or 90% clip. Now, this is important to know. If gold is trading at $1,250 an ounce, you buy an at-the-money call, a 1250 call. Let's say gold goes up $50. Well, that option is not going to make $50. It's going to move about half as fast. It has a delta of 50%. So it's going to pick up roughly half of that, or about $25 or $2,500. That in-the-money option has a delta of close to, let's say, 80%. If you had that same $50 move in the futures, that deep in the money option might pick up 80% or $40. That equates to a $4,000 move in that option. If you're buying an out-of-the-money call in gold, and such as a 20% delta, that option might only pick up $10 of that $50 move. So as you get further out of the money, the deltas become less, and again, the values are not going to appreciate as fast as an in-the-money or at-the-money option. So the general rule that you need to take away from here with this today is deep in-the-money options are going to have deltas of 80 to 90%. At-the-money options, they're going to move about half as fast as the futures. They're going to have a delta of about 50%. When you're looking at out-of-the-money options, those option values will have smaller deltas, 20, 30%, and the further you get away from the strike price, the less that delta value is going to be. If you have any questions on this, feel free to call me here at 866-973-2079.